Good morning. Greg here at Master Trader. Another lesson here on what's happening in the markets and some education about how you can make money in it. So we got the Dow here pushing up to another new all-time high, and it is now beginning to take on a little bit of a climactic type of a pattern here as it pushes higher. And we've got a similar pattern right here that it happened back at the into the end of August, where you have multiple bars moving higher day after day after day, and it ended with a topping tail bar. These type of moves typically end with a topping tail bar just like that, or they gap higher above this run, which we call a novice type of a gap. It gaps higher after that continuous run up. And then you get a red candle, something like this, and then you get some type of a correction. We never know how far the correction will go, but that is the initial signal of a correction beginning. So as prices are beginning to run higher here, right, we thought they were a little extended here, and they just went for a little sideways consolidation and then continue to push higher. But what we want to look for now is that the range begins to expand. So here we've got a wide range, bullish wide range bar that we call an igniting type of a bar because it happens out of a consolidation. And here we have one that happened after a little pullback. But we don't really have a wide, very wide range bar at this point, but you can see the range is beginning to increase. So what we would see is maybe a continuation, and I'm not saying how high it's going to go. Here, I don't know, but eventually you get a wider range bar, similar to something like this, a wider range bar, and that ends the move, and then you would look for a topping tail bar, or many times with the wide range bar, you get a gap up. So the thinking behind that kind of a bar is that, traders and investors feel like they missed the move, and then they rush in to buy, and you get an acceleration to the upside on a single day, or if we're looking at a weekly chart, a single week, or a 5-minute chart, within that 5-minute period. All these patterns are applicable to whatever time frame you're looking at. But the master trader uses multiple time frames to assess the situation. Now you can see on the hourly chart, there's a 24-hour chart. Prices are getting a little extended. They've gone straight up. And that's a climactic kind of move, and one of the measures that we use is the distance from the 20 MA. And that's a visual aid, as we like to call it. What we're really looking at is the distance from any real support, which is right here, which opens the door to a retracement into what you've heard me say a lot of times, being the void. Right? And the void is it's not a void of any reference point of support or resistance, which opens the door to a bigger retracement when it gets climactic. So what's driving this here? Well, we have a stock that's bringing up the rear that has been dead for a while, and that's IBM. It's just been in a downtrend all year. And this is the kind of situation that, as an investor, and we're talking investors since we're looking at the daily time frame and a period of time over months, really gets beat up mentally as well as financially, in that and we got to be careful about what we call blue chips and such, and long-term investing, because even something like IBM could go down for a long time. It could take years to come back. So you have to have a plan. So here, here's a high here, and it starts its way down, and then it gaps down. It tries to hold. It gaps down again. And now imagine you're holding this and you're thinking, oh, it's building up a base. Maybe it was. But rather than resulting in a move higher, it gaps down again. And in other words, it was kind of refueling the tank to then drive lower again. And I would just, there isn't anything that happens in the market as far as investing or trading that I haven't experienced in my almost 30 years of doing this. And point being, I can tell you, I don't remember the exact days or what it was, but we've all been in a situation where we've probably sold that low bar. only to see things start to advance like they did here. But this is a grinding type of an advance, and it doesn't suggest what's happening today, but this is being driven by news, of course. So here we got IBM opening up in this 157-ish area, in this area of resistance, with a big gap. And what we want to see now, ideally from a long-term point of view, is it can go sideways here, absorbing the supply, right? This is supply because this is where others were buying in anticipation of it going higher. It didn't. They get to get their money back today. Right? So we've all been in that situation as well. Who doesn't want to get their money back on something that has underperformed and has you sitting with, this dog, so to speak? Well, if it can go sideways here and can build a new area of support, well, then that opens up the door to being able to go a lot higher, right? Because we've got open gaps here and we don't really have much resistance. So this is definitely one that we want to keep an eye on, going into the next weeks and months and so. So looking at the weekly chart, it's right up into this resistance area here. And if it can hold up here, as I said, it opens up the door to a much bigger move. So here it is. This is what's driving the Dow up to new all-time highs today. We'll see how the reaction is going forward with IBM and whether we want to look at this as a longer-term core investment. That's it for today, guys. Have a great trading day. We'll talk tomorrow.